Joining me now is Ken Zener. He's KeyBanc Capital Markets equity research analyst. All right, Ken, lay it out. Where do you think there's some opportunity and maybe a little too much gloom? Any of these names?
We are very cautious. As you know, our WOW thesis, wall of worry, points to the building products home builders not underperforming the market basically till the last quartile of the tightening cycle. So while we think some are better positioned, we are pretty negative. So, for example, NVR, which is also down, so one name we like, look to outperform. But, demand is falling. Diane laid some of those data points out. We did release our Zener report looking at June pending home sales, which are down. That's for the existing market, down 15% in June, not good. While supply rises, it's up roughly 22% year over year at the end of May, the way we look at it. And in fact, as Diane also pointed out, you have the builders, they have roughly public builders, 200,000 units of inventory, of which 50,000 are unsold. That leaves 150,000 in backlog. And those unsold have a lot of price pressure to clear out. You've got to think some of those backlogs are going to be facing higher cancellation rates. And that's what's eroding, the sentiment in the group.
Sure. So the short answer is no, there's nothing really in this space. And by the way, even NVR, which I think you're a little bit more upbeat on, our guest yesterday said he didn't think CNBC viewers should own it at all because of some particular characteristics of the size of the company and other things. I mean, any response to that?
Yeah, we give advice, hopefully, to have our investors outperform the market.
Yeah, well, all right, full stop. I got you. Let's turn then to some of the home furnishing stocks that I mentioned. If you're seeing this kind of bearishness play out in home sales, fine, I totally understand that. But what about the new homeowners from the past couple of years who potentially now are only just going to start looking at putting that money to work in new flooring or new paint or what have you? Could those stocks be a better place to turn?
Historically, they are, and we would generally expect that to play out. There's obviously different exposure for companies based on new home exposure and remodeling, as well as industry structure. But I do think, our WOW thesis is predicated upon 30% declines in home builders during average tightening cycles back to 1969. Clearly, with negative rates, Fed commentary, but really the gap between the Fed funds and the two-year rate. There's a lot of tightening, and I think a recession analysis points to further downside in our space. There's not a lot of room for looking at individual names when you're having really this large outflow of sentiment.
Fair
and
enough.
Existing home sales are really slowing.
Are you still overweight on Sherwin-Williams?
We are, and that's with obviously within a rating structure that's very cautious on home builders. We have, three that are underweight. So industry structure, we call it the 3 Ps: paint, plumbing, and the pool category we see as the most resilient, combined with the companies themselves operating the best industry structure. But as you highlighted, there's a lot of pain. We did downgrade Fortune a few weeks ago. We just thought the story was over. They did talk about spitting out the cabinet business, which we think is indicative of not of upside, but of further troubles.
Yeah, that's a great point. Although paint, plumbing, and pools, they're the 3 Ps. Those are our glimmers today. Ken, thanks so much for your time. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.